Micron Technology stock is currently trading at 812.73, marking a significant intraday climb of 5.49% as the market remains active today, Thursday, May 14, 2026. This price action follows a series of aggressive target revisions, most notably from Bank of America, which recently pushed its valuation for the memory giant all the way to $950. While the broader indices are wrestling with supply chain anxieties and sticky inflation, Micron is decoupling from the standard hardware narrative. The market expected a cyclical cooling, a moment where the massive build-out of data centers might finally hit a saturation point, but the reality is looking like a structural shift that few anticipated. We are seeing a complete transformation, where memory is no longer just a commodity piece of silicon, it has become the ultimate bottleneck in the intelligence hierarchy. If you are looking at the tape right now, you might think this is just another momentum play, but the underlying data suggests something much deeper is happening within institutional portfolios. Most investors walk into a position in Micron Technology expecting the standard feast or famine cycle that has defined the chip sector for decades. The common belief is that once the big cloud providers finish their current buying spree, prices for DRAM and NAND will crater and the stock will follow. However, the contrarian take here is that we aren't in a typical cycle. The high bandwidth memory, or HBM, that powers these new server clusters is technically far more difficult to manufacture than anything we've seen before. Yields are lower, the packaging is more complex, and the supply-demand balance is essentially locked in through 2026. This isn't just about selling more units, it is about a total repricing of what memory is worth in a world where compute power is the only currency that matters. As we watch these daily swings, the volume profile shows that institutional activity is hitting levels we haven't seen in years. Big funds are increasingly using an individual brokerage to stack positions in MU, often rotating out of traditional software and into these infrastructure plays. It's fascinating to see how the retail crowd on the Robinhood app is chasing the headlines, while the smarter desks at Fidelity and Interactive Brokers are looking at the sum of parts valuation. When you break it down, the traditional cyclical business is still being valued like a utility, but the AI-specific HPM segment is starting to command multiples that look more like high-growth SaaS. This divergence between how the market talks about Micron and how it's actually being bought is where the real opportunity lies. Comment below how many shares of Micron Technology you currently hold, and let me know if you think the AI server build-out is nearing its peak or if we are just getting started. The sheer momentum in NVIDIA stock has obviously been a massive tailwind for the entire sector, but Micron is starting to stand on its own 2 feet as a distinct catalyst. Earlier this morning, the intraday high reached 814.95, and we are seeing very little resistance as it holds near those levels. For anyone doing their own online investing, it is important to realize that Micron's role has shifted from a supporting character to a primary driver of performance. Even Apple stock, which usually dictates a lot of the sentiment in tech, is taking a backseat to the raw demand for memory modules. If you look at the recent earnings reactions, the surprise wasn't just in the revenue beat, but in the guidance for the coming quarters. They are seeing margins that would have been unthinkable 3 years ago. We are talking about gross margins approaching 75% in certain segments. That is not a hardware company. That is a high-performance engine that is just starting to rev up. When you use an intelligent portfolio or look for investment help on various investing sites, you often hear about diversification. But in this current tape, the concentration of capital into the semiconductor space is creating a vacuum. The reality of the situation is that Micron is sampling 256GB DDR5 memory modules that are significantly faster and more power efficient than anything else on the market. In a data center environment where electricity is the biggest cost, a 40% reduction in power consumption is a value proposition that sells itself. This is why we are seeing such a structural bid on the stock. It is not just about the hype, it is about the physics of the data center. The expectation was that competitors would catch up and flood the market with supply. The reality is that the barriers to entry in high-end DRAM have never been higher. Taking a step back to look at what Micron actually does for those who might be new to the ticker, this is a company that essentially builds the short-term and long-term memory of the digital world. Their business model revolves around 2 main pillars: DRAM, which is the volatile memory used for active tasks, and NAND, which is the non-volatile storage used for permanent data. Historically, this was a brutal business. You'd have periods of massive profit followed by years of losses. But the recent move into HBM3E and specialized AI server components has changed the math. They've gone from being a commodity provider to a specialized partner for the biggest names in tech. The past performance of the stock, which is up over 690% in the last year, reflects this fundamental shift in identity. Looking forward, the catalysts are lining up in a way that continues to challenge the skeptical narrative. We have the Q3 fiscal 2026 earnings coming up in late June, and the range of analyst estimates is incredibly wide. This uncertainty is exactly what drives volatility, and for a savvy investor, volatility is a tool. There are risks, of course. If global consumer demand for PCs and smartphones remains stagnant, the traditional side of the house could drag on the high-growth AI segments. However, the transition to AI-enabled PCs and smartphones is expected to require significantly more memory per device, which could provide a second wave of demand that the market hasn't fully priced in yet. Whether you are using Fidelity Wealth Management or managing your own account through Robinhood stock trading, the key is to watch the supply-demand sufficiency ratio. As long as that stays below 110%, the pricing power remains firmly in Micron's hands. The future outlook here is a delicate balance of macro pressures and micro advantages. While the Federal Reserve's stance on interest rates continues to weigh on the broader tech sector, the capital-intensive nature of the AI build-out means that companies with strong free cash flow and a clear technological lead are going to be the ones that survive the squeeze. Micron is currently spending billions every quarter to expand its manufacturing capacity, particularly in its new facilities. This is a massive bet on the future of compute. If the reality of AI adoption continues to exceed the conservative expectations of the street, then these price targets of $950 or even $1,000 start to look less like moonshots and more like logical conclusions. In summary, the central insight here is that Micron is no longer a victim of the semiconductor cycle. It is now an architect of the new compute infrastructure. We started the day with the stock showing strong intraday gains, supported by aggressive institutional buying and a fundamental shift in how memory is valued. The expectation was a return to the mean, a cooling of the AI fever, but the reality is a supply-constrained market where Micron holds the keys to the most essential components. We've seen how this contrast between what the crowd believes and what the balance sheet shows can create explosive moves. As we move deeper into 2026, the authority with which Micron is leading the storage sector is becoming impossible to ignore. Keep a close eye on the volume and the upcoming guidance, as those will be the true indicators of whether this rally has the legs to reach those nearly four-figure price targets. The depth of this analysis suggests that while the risks of a cyclical peak are always present, the structural demand for intelligence-grade memory is a force that is fundamentally reshaping the market landscape as we know it. Micron is clearly positioned at the center of that change, and the price action today is just the latest chapter in a much larger story of technological necessity. This video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video. Comment your thoughts. Outshare with your friends. Bell subscribe for more updates.